What's going on, everyone? Welcome back to another morning live stream here on the PA channel. Hope you guys are having a good day. I know any of you that were taking some of those earnings yesterday are definitely having a good day because, goddamn, I actually cannot believe how big some of these winners were. It was absolutely crazy. Curtis, Chris, Rob, I don't know, man. You guys just absolutely killed it. And then Ram comes out of left field with his 10-1, 11-1, 12-1 gainer on GME. I don't know, guys. Good stuff. Good stuff. Snow was a huge winner. Curtis sold it for $14 yesterday. Got out for $7. Just absolutely crazy, guys. Good stuff. And on this morning's stream, we are going to be looking for more opportunities. We'll talk about Costco. I know that's one that you guys are looking at. We're going to do another scan for some short vol plays. We might do a scan for some PA flies, things like that. Just to mess around, get familiar with the scanner, right? I think the scanner is one of the most underutilized features in the Predicting Alpha toolkit. And I would love for you guys to be able to take better advantage of that scanner. So as we go as well, guys, make sure you ask any questions as we go. If you have any ideas you want to break down together, we can definitely do it. I'm still working from my laptop, so I'm not going to have access to Thinkorswim. So I can't analyze the trade with you, but what we can do is look at the news, look at the terminal, try and filter for some opportunities. So I found something that looked okay right off the bat. What I basically did was I came into the terminal, and when I'm doing a short ball scan, I usually put pretty light filters on it. If I want to go for something that's I'm going to trade more of a theta trade on, we'll call it. So something more near term where I'm betting on realized volatility being less than the forecasted volatility or less than what the market's currently implying. I'm going to just put in a liquidity filter and an IV versus forecast as a way to create a short list of trades. Now, if I wanted to trade something that more Vega exposure, so trading that level of implied vol, right? Market thinks it's going to move with 60% IV. I think it'll move with 40% IV. I want to build a short list of trades like that. I'm going to do the same thing, except I'm going to add something such as an IV rank filter. And then I'm going to use that and start looking at the longer dated options. So let's take a look at both of those right now, see if we can come up with any ideas. I already did a quick scan for short vol near dated, right? So trading that realized versus implied. And I came up with a trade, so found something that looked pretty decent for it. We'll take a look at it together here. So first thing I do is price filter above 15. So I'm just going to type 15 ... in this box, hit tab, go over to average volume. Let's look above 3,000 and IV versus forecast above 1.2. What's going on, Lucas? What's up, baby boss? What's up, Tyro? Rob, you already know what's up, man. Good to see you here. So there we go. We've got some filters in place. And just to give you an idea of how powerful this is, all we did there was say, I want something to be liquid and have a ratio of 1.2 between the current implied volatility for the 30-day and our forecast of volatility, which is an ensemble of models. Those models are listed out on the PA Reddit. When just look for the question where somebody asked how the forecast is put together. You can see the features that go into it on there. Right, so check this out. We went from looking at about 2,000 stocks to looking at 44. Right, so a huge jump, right? We went from looking at an ocean to a puddle. And that's always what we want to do, right? Applying filters helps us find little pockets of the market where there's opportunity that maybe our eyes couldn't pick up. So now that I have these 44 stocks that I'm looking at, do I just go through all of them? Well, I can do one more thing quickly here, which is, right, we took the ocean, we shrunk it down to a puddle, and what I can do now is I can rearrange everything that's left to, be sorted by a certain factor, right? So IV versus forecast is maybe something I'm interested in. So what I can do for this is I can click on the IV versus forecast and put it so that the highest ones are first. So you can see Suro Capital is at the top of this list. Interesting. Maybe that's one that we could take a look at together. Anyone familiar with Suro Capital? Oh, we don't have our price filter in. That's why it showed up. It's 13 bucks. We could still take a look at it. If any of you want to take a look at that quick, let me know a bit about what that is. And we can definitely take a look. But for now, I'm going to show you the one that I was looking at earlier today. Let's see here. Let me put my price filter. All right. And I went to, I think, page 2. I was looking at Vodafone. So what I was doing as I was going through this was I was looking in the scanner quick. I decided I didn't want to look for something that had an earnings event. So I came in here, right? I see the IV 30-day column right here, right? So there's the IV 30-day at 29. And what I looked at instantly was I came across here to the non-event vol 30-day and see that that's also at 29. So I'm on Vodafone right now. And what that's basically showing me is the difference between the non-event and implied vol is 0 on the 30-day at least, right? IV 30-day is 29.57. Non-event vol 30-day is also 29.57. So everything that we are seeing on the 30-day time frame here is regular implied volatility, not an event, not an earnings. So that's one thing right away that I was like, okay, that's a good sign. Maybe let's take a little deeper dive. And we see that the implied vol for the 30-day is about 29.57%. And we're forecasting about 21. So right off the bat, I'm thinking, all right, maybe this is an opportunity to short some vol here. It's very similar to some of the things we've been seeing before, where implied vol is just out, or the implied vol might not be high, but remember, that's not what we're trading here. We're not trading a high level of implied vol. We are trading expensive volatility. So implied vol could be relatively low compared to what we've seen in the past, but still expensive because maybe it should be lower. Ned, what's up, man? How's life? Okay, so right off the bat, implied vol at 29.57, vol forecast at 21. We're looking at Vodafone here, right? Reason I found it, put on my liquidity filters, put on my IV versus forecast filter. It was right there on page 2. Looks like there's no earnings event coming up in the next 30 days. Next thing I want to take a look at is how the IV 30-day and RV 30-day have moved together. And if you check this out over the last month, it's what we like to see, right? The implied volatility 30-day has continued to outpace the realized volatility 30-day. No problems. Right? And this is always something we want to see, right? We're forecasting it to be lower than it is. It's realizing less than what it's implying. Maybe this is a good chance for us to come in here and sell some vol, right? Remember, we're not trading the level, so I'm not too concerned with this vol cone. The fact that we're down here at the lower end, right? If you look, that's where we are, the green line that's highlighted right now. This is where we are relative to historic levels for the different expirations. Don't really care for it, right? I know that it's going to be low. We're coming out of COVID season here. Of course, it's going to be a little lower. Not a ton of volume happening around this stock, right? Basically, like a little bit. We've had a couple little spikes in the last couple weeks, but really this is a pretty low action stock. Not a ton of stuff happening around it. And, that's okay, right? That's okay. We would be trading something at the money here. So as long as the at the money liquidity was all right, I don't think it would be a huge issue for us. Taking a look at the term structure here for the 30-day, we have call skew, which is kind of interesting. Is that something we normally see for this stock? Right? So take that in. We're seeing here that market's not pricing in any massive move, but they are pricing that if we get a big move, it's more likely to be to the upside. So let's come over here to our skew time series and see what's going on over the last month. Rob, nothing gets less action than Pranav. Come on, you can't. Don't insult Vodafone like that. And if you're going to say stuff like that, you got to make sure Pranav's in the chat so he at least has a chance to defend himself. All right, so It seems like the skew has chopped around this like little bit of call skew mark for quite a bit, right? At least the last month here. Well, it seems to always chop around in this range. Anyone have any idea why that would be the case for this company? Why would it always have this little bit of call skew here? Your brother just took a job there, eh? Okay, is that a buy signal or a sell signal? All right, let's do this. All right, so we've seen the skew change a lot in the last couple months. Let's mess around with this a bit to see what we've got. Okay. What do you guys think? Skew's decently steep. We saw it a lot higher recently, though. I guess that was probably going into that earnings event. Let's see. Data's not great there. Oh, what the heck? Pretty bad earnings data. Any news around the company that we should be aware of? Because with what I'm seeing here so far, it looks like an okay opportunity to sell vol. Like, I'm not too concerned about this. It always seems to have this bit of call skew. Let's see. This company just looks like it just chops around. Let's go take a look at any news. Oh, no. Oops. Oops. Let's see. Let's see. Okay, it looks like the only recent information is just the earnings event that happened. I think they took a bit of a hit on it. Nothing too crazy, though. Rob's exposing me for talking about the Costco trade. All right. Let's see. Their share price crash. Is it a buying opportunity? Let's see. Let's see what the fool has to say. Yeah, okay. I'm not seeing anything super sketchy here or anything. Yeah, I think this is an opportunity to be selling some vol, guys. Right, it actually looks pretty bid, right at that 29 mark here. You know, around just before the earnings, we saw it up at around 38. So the earnings vol got taken out, 27, 27, 25. That seems to be the level it's floating at in the last couple of months here. Right, gets up to maybe 30. So we're at the higher end of that non-earnings range right now that we're seeing in this like new low vol environment. I think it's a sell. I think it's a good selling opportunity for sure. What do you guys think? Any disagreement there? You think there's anything I'm missing? There's no earnings event coming up. There's actually no earnings vol being priced in right now in general. So I'm wondering if like we could sell some near dated vol and buy some further dated vol that we think will encompass the earnings event, right? And so my thought there is like, okay, so right now the vol's gonna, hopefully realize less than implied. But in the back, the implied is going to expand because right now there's no earnings event being priced in. They also just had a big blowout earnings, which means a lot of vol might get priced into the next one. So maybe that's an opportunity, right? If they end up getting like what's the average, right? If they end up getting like a 4 or 5% implied move here, could be like a huge trade. So that's something that I'm sort of thinking about. If we could do like maybe like some sort of calendar. Adam's asking, how long do you hold these positions? So I usually hold them for a couple of different reasons. So if everything goes perfectly according to plan, I'll hold them for 2 weeks, right? If the thing's not moving, right, I'll collect my gains, my theta gains on it. I'll close it out if the spread between implied and forecasted decreases, right? If it becomes like maybe like a 1.05 spread or something like that, I'd get out for sure. So what is going to happen is either implied vol is going to actually come down a bunch still. It's not what I'm betting on, but if it does happen, right, so be it. Or if the realized vol picks up a lot, if the realized vol picks up a lot and is now outpacing my implied vol, I'll also be getting out of the position. Or if I start to approach expiration, I'll get out of the position as well. Or if a better trade comes along, I'll reallocate my capital to take advantage of this other trading opportunity. Right? So those are the different reasons I would exit a position like this. If I were to buy some in the back, it would be if the implied vol started to pick up and an event started to get fairly priced in, then I would probably do that as well. Right, and so what I'm using to sort of look at that is this volatility through time or implied move through time. Right, there might be, so we can see there's no event being priced in for the last week. If we can figure out where we think it'll start to price it in, well, that would be good, right? And it should be in the next like couple days if it does. But I actually haven't placed a trade exactly like this one before. Maybe Jordan has. Might be worth asking him because I'm sure there's some complication that I'm missing there for sure. Even though if we sell the front, we are selling the non-event vol as well. And if we take a look at the term structure, it's pretty flat right now, I believe. Right? If we sell this 30 and buy, let's say, this 90, right? That might be a good trade, right? There's no event being priced into this 30. It's just, but this might come up as an event starts to get priced in. So that's something that we can maybe do. Liquidity might be an issue here, though. Right? There's a chance that liquidity screws us around a little bit, but it's definitely an idea worth toying with here, no doubt. Now, if we wanted to go a little bit further, we could also try to look for companies that are correlated with Vodafone, trade maybe around a similar vol level, and then do a relative value comparison to see, okay, like for the basket in the sort of telecom space, is Vodafone the one that we want to be selling vol on, right? So that's another thing that we could do. We could definitely take a look like through that lens as well. Okay, so that would be my analysis on Vodafone here. I think that that's pretty good. I think it's a decent opportunity. If you guys have any questions about it, let me know. We can keep chatting. But if not, we're going to take a look at one more trade for today. It's an earnings trade. I see the boys chatting about. We're going to talk about Costco earnings. All right. An implied move of 2%. Oh, Costco. Ooh. What are we going to do with this? Maybe can we get a bet to the downside going on here? right? Looking at this realized distribution, maybe we can get some sort of like leveraged 132 or something. It's probably a ton of put skew given the type of company. Well, there actually isn't. Market's not really pricing downside risk here. Just like a tiny bit. Market's just saying it's probably not going to move much. What do you guys think? Would you sell vol here? Seems like a kind of, you know, it's just such a low implied move. I don't know if I want to be, selling vol here, especially seeing like an average implied move at 3.25. Tender Vega offer saying, by the way, I'm assuming you're talking about like PSTH. He's saying we talked about PSTH last week and we're wondering why vol spiked. It was because he had an interview and said that they found an acquisition target and it'll be disclosed in the coming weeks. Oh, so you were talking about like what? Because I was asking like why did the vol spike over here? All right, yeah, Vega, thanks a lot, man. So yeah, vol is pretty bid here, right? It is like super bid. So if he said he's going to release it in the coming weeks, we should maybe be selling something shorter dated, right? And buying something longer dated. Like this, I'm trying to think about how these things work. When they announce an acquisition, does the stock even rally? Right? I'm not sure if it actually like rallies or if today's price sort of reflects what they think it'll be worth. I really don't know enough about these SPACs. It's kind of, it's kind of hectic. Right? Look at there's a ton of call skew being priced into the 30-day line here. Huge upside risk being priced in. So yeah, I definitely wouldn't be selling it. But maybe you can get like maybe in the 90-day, 30-day to 60-day range, put on like an out of the money vertical or something. The vol might be a little expensive here. I mean, the call skew might be a little expensive. So maybe we could take advantage of that in some way. Yeah, this is a lot of call skew being priced in. Let's see what it is historically here. It's actually funny. It's like the same level of call skew we always see priced into this thing. What a weird company. It's been like the biggest nothing burger for people to hold for like the longest period of time. And, I just can't help but feel that this thing is just going to be nothing. It really, I just know too many people who've been hodling for too long for this to actually amount to anything. Oh, Adam, I can't. I don't have access to my Thinkorswim on this computer, so I can't actually go in and help you price it out. But I can take a look at it with you and give you an idea of what I'd maybe do. It's probably similar to what you do. But if you want something more accurate, I know that if you tag the earnings boys in the Discord, I think they are pretty much the pros at pricing the non-event vol or pricing the vol drop. Okay, so I'm not. Okay, how much is this thing? So it's moving a lot right now. It's implying a lot of volatility. No, Ram, what's the deal with Alta? HIBB is showing a 0% implied move. Okay, so here's what I would maybe do, Adam. Just to double check that you want to cross-reference this data. You always want to make sure that what you're looking at is good. Let's check something quick, actually. HIBB. Right, so we have no volume here. right? So it's kind of hard. It might be hard for us to get a read on the data, right? And part of that is we have, you know, no volume. So what I would maybe do is if you really want to take a look at this one, I would look across the chain and be like, okay, what's the front month volatility versus like the next month volatility? And if you have something expiring sooner before the earnings event, you know, maybe you see like volatility is like here and then it's up here and then it's down here again. Well, you can expect this to drop down to here when the event is not being priced in because it would fall in line with everything else. So that's one way that you could go about doing it. But with the given the level of you know, volume here, you know, you might be able to get some at the money vol, sure, or at the money you know, option volume, right? Get some fills. But you know, if you wanted to put on wings or something, you know, good luck with that. It's probably not happening. What's the deal with Alta, Reb? Is Alta an earnings play? It's today after close. Cool. Are you saying this is a long vol opportunity? Or are you going to sell some vol here? Implied move is just trickled down over time here. Basically no implied, like really low implied move. This thing's had a few rippers. Yeah, it's had a couple rippers, man. Implied move's pretty low, you know, but with how much lower this is than the average implied, I would definitely take a look and be like, have they pre-released in any way? Is there any of that kind of going on? Your short vol going in. Okay. So yeah, the one thing I'm thinking here, man, is like implied move is 5%. Average implied move is 7.4. Right. So that's not something I'd love to see. I do not, you know, given like if we take a look at like these jumps, right? Like I don't know, man. I don't know. It might be a little bit low of a move for me to sell. If I were to take a bet here, I'd maybe be long. I'm not seeing really any directional edge here. Yeah, like I'm looking at this earnings distribution. You know, it might make sense to do like some sort of call fly. But I don't know. I don't know if I see a ton of edge on a call fly here. Especially like the skew's pretty flat in the short term here. I don't really see any edge for the call fly, but I don't know if I'd be selling vol. Right? Like we have to think about it also like in terms of like our upside versus downside here. Right? If we look at just the jumps here, we have a ton of jumps that are like 7%, 8%, 10%, 15%. Right? A couple of them that are like what, 2 or 3%. So I would maybe lean long vol here. What am I'm probably risking like, you know, a 2% versus a 5% implied move. And then maybe there's a chance that I hit it big. You know what I mean? So that would maybe be the way that I would look at it instead of the other way around. What do you think, man? What do you think? What are the guys chatting about here? Jordan's getting his COVID shot today. Nice. Good for him. All right, guys. So if that is it for this morning's stream, right, we just wanted to look at a couple ideas. We'll probably wrap it up. If you're new to the stream, make sure to drop a little like on the video. It always helps out. And subscribe. So Costco, I'm thinking no trade. Alta, I'm really on the fence about, man. Like that might be a good long vol bet. Right? Bet small. If you hit nice. And then Vodafone looking like a pretty good short vol play. right? Non-earnings, go take a look at what the At the Money straddle is going for, stress it out, see what you think. Might not be a bad one. And with that being said, guys, we're going to wrap up this morning's stream. We'll see you all again tomorrow where Jordan and I will be doing a little podcast. Take it easy.